Hello, Jamari with Tax Assurances. Just want to do a quick video about the type of business entities that someone can choose when they're looking to set up a business. So the first one is a sole proprietor. That's pretty easy and straightforward in a lot of cases. It's usually not that expensive. And sometimes if they're just, even if they don't do any incorporation, if they're like a 1099, that can satisfy as being a sole proprietor. When it comes tax time, what they'll do is they'll report any income or any expenses on what's called a Schedule C. The next step up is usually like an LLC. That involves some legal paperwork. Usually you're going through an attorney or an online legal service that's going to help you set that up. It's a few $100s more to set that up usually. But when it comes tax time, again, that's going to show up as a Schedule C when it comes to accounting for the income and the expenses that are related to the business. The next one is a C Corp. A C Corp has its own tax return, which is called an 1120. That 1120, again, accounts for any income or any expenses that occurred for the year, and that is separate from any individual tax return. And then the last one is the S Corp. The S Corp has its own return. It's a little bit more to set up. It's going to have what's called an 1120S when it comes tax time. The way it's going to end up on someone's personal tax return is what's called a K1. So that K1 is going to reflect what has been the responsibility of each business owner for that S corporation when it comes tax time. And I forgot, the other type of entity is a partnership. That's going to have what's called a 1065, and that 1065 is going to summarize what happened with the business for the year. If you have more questions about legal entities, just give me a call.